Hi, Killian. Thank you for being here today.
My pleasure to be here. Always a pleasure, always a joy.
Excellent. So, could you tell us about yourself and your career?
Yeah, so as you said, my name is Killian Charles, President and CEO of Brunswick Exploration. I'm a geo by background. I spent some times as an equity analyst in Montreal, working in Canada, working for mid-range boutique firms covering a wide variety of mining stocks, but predominantly a focus on base metal and special situations. I then joined Integra Gold just prior to his acquisition because I knew it was such a wonderful project. I knew it was going to leave. And so went through that transition. Then I joined the Osisko family and Osisko Metals. They needed some help on the base metal side, so happy to provide some assistance there. And the last 4 years now, I've been working with Brunswick Exploration, focused exclusively on lithium and designing a quite unique worldwide global domination lithium exploration program.
So, I guess we could start with how would you say that Brunswick exploration stand out compared to other junior explorers?
Yeah, we're quite cognizant of what our strengths are. And I think that's something that a lot of people sort of forget what the junior market is best at doing. I've always taken the view that, mining companies, majors, producers are best at doing exactly that. Production are best at building mines, permitting mines. And the strength of a junior is really in its ability to be reactive and to push the envelope into new jurisdictions, new commodities, and new exploration strategies. And that's really what we've designed Brunswick to do. From the get-go, we knew we wanted to make discoveries. And of course, every company says that to a certain extent, but we really focused on a commodity that had not seen systematic exploration. And that was obviously lithium. Launched one of the largest programs in the world, at the time exclusively focused on Canada. I mean, we did every single province across Canada, sending teams out there making discoveries. We have made predominantly world-class discoveries or potentially world-class discoveries in Quebec. Not surprising, it's a world-class environment. There are things there that just completely stand out from peer groups. But we wanted to continue demonstrating what our strength was, and our strength being discoveries, exploration. That's what we are good at. Not to say we can't do development, but really what we are good at is finding new things. And that's why we went actually into Greenland last year and made the first confirmed lithium discovery in the entire country, which we've now gone back to this summer. And we are now at a drill ready stage for the first confirmed lithium discovery in Greenland. It is absolutely exciting times for Brunswick exploration. But again, it's about playing to our strengths, understanding what we're good at, understanding that the potential model that we have designed to make discoveries can be applied in so many new jurisdictions. And that's something that's quite unique, to be quite honest.
So, what I would like to do is, could you summarize, since we spoke in March, mid-March, could you summarize what has Brunswick exploration done? Summarize the year for Brunswick exploration so far.
I mean, even when the lithium price is at such relative lows, I mean, it has been rising for the last 2 months and is starting to be at a much more healthy level, as I would describe it, due to underlying strong demand, which is always a good sign. We've been quite active, and that really is the mindset across Brunswick exploration, across the team, across our portfolio. We always want to be pushing the envelope. So at the start of the year, we had launched a 7,000 meter drill program on our main asset, Mirage, located in Quebec. We're now gearing that up towards a resource estimate this year. So we, proceeded to put out a number of drill results from this particular asset at the start of this, say, spring and into early summer. Then we transitioned to boots on the ground prospecting across our large portfolio in Greenland, confirming the discovery that we had made. You have to understand that the discovery we made in Greenland, we made it on the last field day back in 2024. So we knew there was a lot of stuff, a lot of work we wanted to do around there. We've since dramatically expanded that discovery. It was one outcrop before. Now it's several of them, a multitude of them over a major corridor that's a couple of kilometers long by a few hundred meters wide. this is exactly the type of discovery you want to be making. About 45-minute helicopter ride from the capital Nuuk. 25,000 people live there. It's pretty humbling to be making big discoveries like that still in this day and age. Even after all of the previous cycles, seeing all that work, I mean, we're still active out there. We then sent out the team to do more work across the rest of our portfolio. We had consolidated a number of targets across Greenland. And just as of last week, we started drilling at another one of our projects. This would be Anatacau Main. So that's located in Quebec, about 22 kilometers east of another project we called Anatacau West, which is the extension of a future Rio Tinto lithium mine. So we've just kicked off drilling there as well. We're quite active between drill holes, resource estimate to be released this year, lots of prospecting results, and now new round of drilling. That's how we like to do it inside Brunswick.
Perfect. By the way, we'll speak about the lithium prices in a second, but what is the lithium price as of, if you have looked at it this week?
So, I mean, there's multiple ways of commodity price. You can look at the spodumene, you can look at lithium carbonate as various proxies, if you will, for what the lithium price. It's not like there's a singular price that you would look like in copper or gold. What matters more is, from my perspective, is that I think we've seen the floor. I mean, at the start of going into the start of summer, like we'll use spodumene in this case, was trading around $600 a ton US, and subsequently rose to almost $1,000 a ton over a span of 2 months. And it's pulled back a little bit. It's retraced now to the 800-900 sort of level, but it's in a much healthier position than where it was just at the few months ago. And the reason for that is just goes back to that underlying demand strength. You know, when a lot of people sort of saw the precipitous drop in lithium price, they sort of said to themselves, that's over. It's over for lithium. But that was never the case. That was more of a question of oversupply, an unbalance in the market. But that wasn't really caused by, dropping demand, which is always going to be so much more worrisome, right? If demand is stagnant or going down or increasing 1 or 2% a year, it's really hard to generate interest. It's really hard to form a future bull market. But when you look at lithium, I mean, lithium demand grew 15% last year. It's forecasted to grow another 15% this year, and will more likely grow another 15% next year. Well, that's a staggering amount of new demand that is still coming out from an ever-growing base, which tells me this unbalance that we're seeing in the lithium market due to oversupply, it's naturally going to correct itself. A lot of other times in other commodities, when you look at oversupply, it requires what we call supply discipline, right? Where the highest cost mines shut down, and from that basis where we can rebalance the market. We haven't really seen shutdowns on the lithium side. A few mines here and there have closed, but none of this, supply discipline that's often discussed in copper or in zinc or in nickel or in these other commodities. Yet the market's balancing itself without that supply discipline. And the only way it can do that is due to very strong demand. So in my mind, with that, you are going to form the next bull market. Absolutely form the next bull market for lithium. And I think it's going to come a lot faster than people expect. You saw constant rise from the lows of, let's say, May into June. 2 months, the lithium price rose almost every single week. It's pulled back a little bit, but, it's starting to become a lot stickier. And so going into next year, it's going to be much more interesting. And you start to have, a number of projects that are out there that have slowed down because capital availability went down. That tells you, again, that next wave of supply is going to take much longer to hit the market, which tells you that the lithium price will rise again, which means that it's going to be fun times for a lot of juniors out in the space. Juniors like Brunswick Exploration, who are extremely active on the exploration side. we definitely did not rest on our laurels, so to speak.
How far away do you think the lithium market is from sort of becoming a more mature market where you don't have these massive swings and have a little bit more price stability with obviously ups and downs?
Yes. So, I mean, that's a very fair question. It's something that I've harped a lot on lithium a lot. It is an immature market, and so it will reach that base, I think, within the next few years. But as we progress, you're going to start to see, to your point, these sort of cycles get tighter and tighter, right? Where you're not going to have a quintupling. That was the last bull market, right? The lithium price went, almost 5 times, if not more, from its base. Actually, it actually went much more than that. It went from, call it $400 a ton to $4,000 a ton, right? That's almost tenfold. We've never seen copper do that. We've never seen gold do that, or silver for that matter, in such a tight time frame. That is going to slow down, absolutely. I would say, the next 5 years, you are going to get sort of that more stability. But as long as demand is that strong, it's kind of hard. We don't have good metrics out there to compare to. I mean, 15% year over year demand growth. I mean, that's almost tech industry, right? That's like tech demand growth. You look to copper, you look to zinc, you look to all these things, and people freak out that, demand growth is going to be 3%. I mean, this is much higher than that, and it's showing no signs of slowing down, even if you're starting from a larger and larger base. So, I mean, I'm quite positive that yes, eventually the market will reach that maturity, but as long as that demand stays very, very strong and it shows no signs of slowing down, get ready for some good momentum. Let's put it that way.
What is sort of the minimum price, the break-even price for the tier 1 lithium mines?
I mean, tier 1 lithium mines work. There's no way around it, because that's they go through every single cycle. They're able to generate profit at every part of the cost curve. The difference is building a tier 1 mine. Okay, that may make a change, because now we're looking at return on invested capital, net present value, which we have to obviously put into CapEx. That's all fine. And it's going to show a higher required price. But if you actually look at it on a year-to-year basis, I mean, they're probably going to make money at around $600-700 a ton. Not a lot of money, but they're still going to make money. My mind is more, what's a nice sustainable price for the industry, right? Where, not just the tier 1 assets are making money, but you need to have the tier 2 or the tier 3 assets making money, or else you're going to crash the market. To be quite honest, you're going to shut down every single mine. For me, that's more like $1,500, right? You're still talking about roughly a 50% increase from where we currently stand right now, which is shockingly not that hard to do on the lithium side. But I think 1,500 is what I would call a good steady state. That's, 2 years ago, we would have called that $1,800 gold, right? Or 2-3 years ago. Now we've sort of moved beyond that a little bit. But the point remains sort of the same in this situation, right? Where it's a price where everyone is able to make money, and you're able to have a constant, steady influx of new assets. As you deplete old ones, you're able to replace them with new ones on a constant basis. Now, that's a perfect environment. What's really going to happen is, over the next few years, the lithium price is going to go up to $2,000-3,000 for 18 months, and it's probably going to go down to 1,000, and go back up to 15, then 1,800, and it's going to whipsaw around a little bit. But and that's why it goes back to my point. Like, there's a good runway ahead here for lithium juniors to take advantage of.
And finally, on the lithium price, that $1,500 a ton for spodumene concentrate, is that sort of the price where Mirage and some of these other assets in the James Bay region get built?
Oh, absolutely. I mean, the thing is, again, if this was China, they would build them at any price point, right? But public markets have a different view on things. They need to ensure that payback is rapid. And again, that's perfectly normal and perfectly fine. But these are also long-lived assets, right? The assets in Quebec are bigger than most other assets around the world, are higher grade than most other assets around the world. So these are the type of assets that are going to catch a few cycles. If you're mining there for 20, 25, 30 years, you're going to catch a few bull markets. And that's how the Chinese build mines, to be quite honest. But, I think $1,500 spodumene concentrate absolutely works. One of the main issues against that is the fact that there's no refining capacity truly in the West. So transportation costs ends up being a big issue for spodumene concentrate out of the James Bay. If you were to build a refinery, a large scale refinery to handle that material anywhere in North America, I won't be surprised if the price drops down to, call it $1,200 or even possibly $1,000 a ton. I mean, that's what the Australians are able to, or sort of historically able to demonstrate strong economics, because they would just have it shipped to China for next to nothing to be refined over there, right? So they would save, a couple $100 on that ton of concentrate because they didn't have to ship it from North America or Europe into China. They would just ship it from Australia instead.
Is there any plans to make a refinery? I mean, I think, for example, for Rio Tinto's perspective, who has obviously taken a big bet into lithium, they probably will be one of the consolidators of the James Bay region. Obviously, they must have thought of this, as they can lower their cost a lot.
Oh, absolutely. And they do have plans to build a refinery. So they have picked up assets that lead us to believe that there's going to be work on that side. There remains the shell of what a company called Nemaska. They had plans to build a refinery in Quebec. It's partially owned by, we'll say, a para-government fund that is moving that one along as well. So things are advancing on that front towards eventually bringing it towards Quebec having its own refining capacity and into North America. There are plans, Elon is building a refinery in Texas. There are plans to build refineries in Europe. So, it's a little bit of a classic chicken and the egg type scenario, or horse and cart, which one is going to happen first? It's always hard to say. Ultimately, the way I look at it, the assets, you can't move the rocks, all right? The rocks are where they are. The refinery can be anywhere in the world, right? It's a chemical plant. And having the endowment that Quebec has, you cannot move that around. So it makes sense to put a refinery as close as you can to where, the rocks are located. So I would imagine that because Quebec's a world-class environment, you will eventually put refineries in Quebec. Whether it's in 2 years, 5 years, 10 years, it doesn't matter. It's going to happen one day. And then you're just going to unlock a further wave of development of assets in the province.
Let's speak about your financing that you did in June. So you raised 3.5 million Canadian. Who participated in the raise, and why were there two types of units? One life and you had one non-life, which was slightly priced higher, $15 instead of 15 cents instead of, I think it was 13 cents. But with a full warrant, that was also priced slightly higher.
Yeah, so I mean, it's because we had two groups of investors, if you will. We had one key group that wanted to participate into Brunswick exploration. So, for those who know and don't know, life financings essentially allow free trading paper, which can be somewhat problematic, but the investors that came in did not really care whether the paper was going to be free trading or not. They're like, look, it's fine with the 4-month hold. We're willing to accept a higher price. We're willing to accept a higher warrant price as well. We want to hold the stock. We want to maintain our position in this company for a long time. So that was sort of the mindset around the financing, was really just, we were bringing in this particular group. And then I figured that I was going to feel a little bit of pressure from existing shareholders saying, well, how come they get, access to a financing? We would also like something. So I say we did a pseudo rights offering, is how I would describe it, we opened it up for other people that wanted to tag along. It was mostly existing shareholders who bought into the financing, which was a strong, in my mind at least, a strong vote of support in terms of our strategy and our plan. And so, it was a financing that we upsized. Obviously, dilution being what it is when you're doing financings at 15 and 13 cents. We kind of tried to keep a little bit of lid on it to not just blow out our share structure here. We are major shareholders of our own paper at higher prices. We would like for it to return those higher prices. But look, for us, it was a very simple way of bringing a new group, allowing existing shareholders to participate alongside this new group. And now, we use that capital towards doing our exploration work in Greenland. And we have, some other plans that will be announced over the coming weeks and months here.
So what's your current cash and working capital position?
It's about $3 million. So we're sitting in a nice, healthy position. We're very careful and try to make sure that our capital goes towards high impact programs. And when we look forward, that's why we're, even the drilling program that we're doing right now at Anatacau, part of that capital is actually funded by the Quebec government. We applied for grants to fund up to 50% of that program, thereby, again, just ensuring that our capital goes, and it was non-dilutive, by the way, it's literally a grant, ensures that, every time, everything that we do is high impact and allows us to, put as much capital as we can into the ground, be it drill or helicopters or geos going out banging on some rocks. That's what matters to us.
How much cash do you expect to end the year with if you don't do a financing?
So we should finish the year in the, call it the $1.5 to $2 million range.
And what's the G&A burn rate per month on average, exclude drilling?
We keep our G&A. The thing is where when you look at our G&A is that a lot of the work ends up going into target generation. So our G&A looks a little bit higher, but it works out to about $1.5 million a year, more or less, all in. So it's not so bad, all things considered.
Fantastic. And so now, could you also summarize what's the capital structure? How does it look like?
Yeah. So board management own, call it around the 35% mark. We have a family office out of Europe that owns another roughly 10%. Then we have sort of the Osisco family and other affiliates and, sort of that world that probably owns roughly about 10% of the company. Then we have a number of institutions that own roughly another 5-10-ish%. So, just across, I would say, call it 24 phone calls, we're well above the 50% mark in terms of shareholdings, right? Which is exactly what you want to see. And then the rest is a mixture of, smaller shareholders, retail, high net worth, small institutions, sort of your normal mix that one would expect to see.
So let's move to Mirage. So could you first of all tell us about the consolidation of Mirage?
Yeah, look, so, we wanted to, again, we see a lot of upside at Mirage. We wanted to make sure that, the entire asset was consolidated. We had picked up some claims in partnership. We extracted some claims out of Osisco Development. So they still had a minority interest on those. And so we essentially exchanged a property that we felt didn't have any more lithium potential on it for that minority ownership. So it allowed us to consolidate our ownership in the core part of the asset and just, drive it forward from there on out. We see a lot of upside, especially as we move towards a resource estimate towards the end of this year. It just made a lot of sense to clean up sort of these straggling little details here around the asset.
Awesome. So let's talk about, first of all, this year's exploration program at Mirage. How much did you end up drilling and what did you learn?
Yeah, so that's it. So we drilled about 7,000 meters, predominantly focused on extensions. We knew that we wanted to target a resource estimate. We had drilled about, call it just shy, around 17,000 meters. So we knew we would hit the 24,000 meter mark. Obviously, we would always like to drill more, but there comes a time where we got to put out a resource on it. And so we felt that time was coming. So there wasn't as much major extensional drilling, which I like to do. We sort of knuckle down and focus on the core part of the property, which is a roughly 2 by 2 kilometer area, where we've drilled a number of quite large spodumene-bearing pegmatites, continuing on that trajectory to sort of expand those and get Mirage to a state where we can put out a resource estimate. So we were making sure to plug in holes in the drill pattern, very, very classic stuff. That's now done. So that's where we're now in a position where by the end of this year, we hope to have a resource estimate ready. In terms of learning, I mean, we have learned that this is an asset that still has a lot to give. Even after all this drilling, it is still open. Even after all this work, there are still a number of spodumene-bearing pegmatites that have 1 or 2 drill holes into them that are not going to be captured in the resource estimate, that are going to be very easy to continue growing this asset going forward. It's a significant area. If you take a step back and you think about it, there's over 10 kilometers of strike length where we have identified spodumene-bearing pegmatites, and we sort of only focus on an area that's roughly, call it 3 by 3 kilometers. There's a lot more room to play around there. There's a lot more work that can be done, but we're also conscious of our share price, of our cash position, of the lithium market itself. If I had $10 million, let me tell you, I'd drill a heck of a lot more. But we have to be careful. We have to make sure that where we put our work is most impactful. But there's a lot more that can come out of there. That's for sure.
What did the all-in drilling cost per meter end up being?
So if we go all the way back to the start of the year, or start of the discovery, we're averaging around $450 a meter. We think that cost is going to continue. Canadian, yes. Canadian.
Yes.
That's helicopter supported. That's an all-in cost. We think we can probably, going forward, continue dropping that probably towards the $400 mark, probably maybe even high 300. So pretty happy with where we're standing right now. Again, why? Because we know what we're doing. We're very comfortable doing exploration work in Quebec, obviously. And we're very judicious in how we use our capital. So very happy with the drilling costs up until now. And I see even reasons to continue improving going forward, to be quite honest.
Timing, you say end of the year. Are we talking October or are we talking December?
No, it's more December. We just a question of getting everything sorted here. So it's more, for us, it's late Q4. I'd be shocked if they moved into January, to be quite honest, because fairly confident. We're just talking to everyone again last week, barring some sort of shock surprise. I mean, at this point in time, there's no reason to imagine why we can't get it out in December. Otherwise, yes, at worst, it'll be the first week of January, but that's not a huge deal overall.
Could you give any indication, ballpark figure? In terms of size, grade, how does it compare? Do you think it will compare to other resources in the area, which there are some other quite good resources?
There are some quite good ones in Quebec. I mean, obviously they have 2 to 3 to 4 times the amount of drilling that we have. So we have to sort of temper our expectations around that. But at the same time, we do think that we've said from the get-go, right? What are we targeting? What type of asset are we looking for? We want, call it 50 million tons at 1%. That's always what we try to work towards at any particular asset. If we don't find that it can hit that threshold, we're not going to continue doing work, right? There's assets that we had drilled in Quebec that we did not believe were going to hit 50 million tons. We simply stopped drilling there because there was no point in continuing to work there. So that's pretty much what we're targeting at Mirage. Grade might be a little bit above that. Tonnage is going to be around that. That's pretty much where we're guiding towards. So I'm very much looking forward to having a number in hand, so to speak.
What are the next steps for Mirage after this in terms of drilling, metallurgy? You want to do economic study, early permitting, other work?
It's going to depend on the context of the market. Typically, companies would say, "Oh, we got to go straight into a PEA," and I mean, it's kind of hard to go into economic studies when we've already done some metallurgical work. I'm not sure. I do not expect to have to do more metallurgical work, but to go back to the asset itself, I'm not sure our investors would want us to continue to just roll into an economic study just because. If it cost me $500,000 to do an economic study, why would I not put that towards drilling instead? Especially on an asset that still has so much more to give, that still has so much more upside. There's no hurry to do the studies in my mind. We've always been doing permitting type work. We've always been working on that side, data collections. Those are all important things that need to eventually happen. But it goes back to the conversation we had to start. What is the strength of a junior? To make discoveries, right? To explore. That's where we are strongest. That's where I can deliver the most return for my shareholders. And so that's what I want to focus on as much as I can. So absolutely, we are going to be working towards that. I won't even say infill drilling, just show the full potential. My peers have 2 to 3 times more drilling than I do. Well, why would I do an economic study until I have that size and that done that much drilling and have found that much? It just makes perfect sense to me.
In other words, this resource is a starting point to some degree.
Oh, absolutely. To me, it shows that, hey, this is something that's serious. This is something that can grow. Here's what we can deliver. Now let's do more, and hopefully not just do it there, but do it in other projects, do it in Greenland. I mean, that's exactly what we want to keep demonstrating, so that when the lithium markets do come back, next year or the year after that, when investors are trying to figure out where they want to put their hard-earned capital, they're like, well, here's a company that's very active, that is still very much in its expansion phase, and not just at a singular asset in Quebec at Mirage, but on a global basis as well. That to me is the most exciting thing that I can offer shareholders. That's a lot of torque that they can move on.
Does it even make sense at all to do an economic study, a PEA, for example, if you think that this eventually probably will get consolidated by Rio Tinto and maybe some other company, and have 1 or 2 centralized processing facilities?
Hey, you said it, not me, right? But look, we take the same view. Quebec is a world-class environment. When I look at other world-class environment on the lithium side, what happened to them? They all got consolidated by majors. Majors started picking up all the assets that they can find and making moves. Quebec is going to undergo the same wave, whether it be Rio Tinto or Albemarle because it's their backyard, or some other group. It doesn't matter. Consolidation will happen in Quebec, and every shareholder is going to benefit from that, from all these different companies. You almost can't go wrong in the province, to be quite honest.
By the way, first of all, were Rio Tinto's asset, I think it's called the Galaxy Lithium deposit?
Yes.
What's the status of that?
So, I mean, it's moving along very well. I think they're investing a significant amount of capital this year. It's fully permitted. It's moving towards construction. Construction should be in the next 2 years, or finish construction in the next 2-3 years. So things are moving very, very fast there. We have an asset right next to it, Anatacau West, which is the extension. We have another one 22 kilometers to the east, as I was talking about before, Anatacau Main, which we're now currently drilling. So things are moving quite quickly on that front. And again, it speaks to the upside of the province. As you start to build more mines, as you start to build more assets there's going to be a lot of upside for companies that are strategically located, is how I describe it. And Brunswick, with our portfolio, I mean, we are absolutely strategically located.
Perfect. So maybe you could summarize the program at Anatacau Main and also why you choose to drill Anatacau Main over Anatacau West.
Yeah, so I mean, we had made a discovery back in 2023 at Anatacau Main. We hadn't drilled it yet. Anatacau West, we had drilled. We drilled the outcropping spodumene mineralization. We put out those results. There's more potential along strike, but it would be wildcat drilling. So it would be essentially blind drilling to continue on there, because we're expecting it to be a number of stacked vein or stacked pegmatite dikes. So, there's every indication that they continue towards the towards the east. But, it didn't make sense to do wildcat drilling on that front. Our capital is hard earned from our investors. And so here we had another asset, undrilled. It's a major outcrop, 15 by 100 meters, roughly. We needed to go ahead and drill it. That's what we're doing right now. And so there's a lot of upside there. We'll be putting out results from it later this year. But fundamentally, whether it's directly the extension of what the Galaxy project or 22 kilometers to the east, to me, it's all the same, right? You're just developing more tons in an area that will have a future mine. And that's very exciting.
Perfect. So when do you expect to have assays from Anatacau Main?
We should be able to have assays, I would say, late October into early November. So coming up pretty quickly here. I'd say we're about 6 weeks out from getting first assays. And, it should be kind of exciting again, right? Between putting out a resource estimate at the end of this year, putting out drill assays. That's exactly what you want companies to be doing. You want them to be out there doing work, not just attending conferences.
No, for sure not. So then I would actually move over to Greenland, and maybe if you could summarize this year's field program. And by the way, is it wrapped now also?
Yes. So that program finished late last month. So the program in Greenland really had sort of two components to it. We had our discovery in Nook, which we absolutely needed to expand. I mean, that discovery was made at the tail end of our field season, literally the last day back in 2024. We needed to see it grow, and that's absolutely what we have done. We are now in a position where it needs to be drilled, just like our Anatacau Main asset. So expect 2026 to have as an objective drill Greenland. That's going to be a major priority for us. We have found a number of well-mineralized spodumene-bearing dikes at surface. It is in a very good location. As I mentioned before, you're only 45 minutes out from Nuuk, the capital, so full access, full service community, which is what you want. Easy access as well by helicopter, but also by boat. There's a number, even though we're a little bit more inland, there's a number of passageways that reach there. So, it'd be a boat that would just commercial license that would go all the way down to collect any concentrate and ship it out wherever we want, be it Asia, Europe, or North America. It is very easy to access. So that was one side of the program. Then the other side was more on the exploration side. We had staked a number of assets. We had grown a number of our portfolio. And so, that's what we've focused on as well. And so we have results coming from that shortly here. And so there's a lot of upside left there as well. And it really plays to our strength, right? Before we showed up in Greenland, there was no known spodumene. And sure enough, we've demonstrated that there is. And now we're at an even better stage. Now we're ready to drill it. That's how fast we can work in Brunswick exploration, right? That's how aggressive we are. That goes back to what I've been saying, our strength. We are good at making discoveries.
Nook will for sure be drilled. Do you think any other target will get to a drill-ready stage? Maybe with some field work early next season?
Yeah, so we haven't finished everything in our field program because we wanted to make sure that, again, highest impact where we have a discovery, we wanted to focus on that as much as we can. So right now, Nook is guaranteed to be at a drill ready stage. We will see for the rest of our portfolio whether we can bring some of the other targets into a drill ready stage in 2026. But you only need one. I mean, I can be very greedy. I can want more than one, but I'm already happy with just having Nook being at a drill ready stage, right? Already that to us is a very significant success.
Can you, before drilling, get a sense of if it has the potential to contain more than 50 million tons?
That's a very good question. And it's a very good debate that we have internally as well. I take the view that the simple answer is no, for better or for worse. So, for us, a good example was an asset that we had drilled before, Elron, where we had found a major outcrop, a couple 100 meters long in Quebec by the side of the road. And back in early 24, we drilled it. And it just didn't have the potential. Even though at surface it looked good, you don't know. And so we drilled it, and it didn't have the upside that we saw there for it to be 50 million tons. And we immediately stopped the program and moved on. Vice versa, you have an asset like, let's say, Q2, which at surface was a number of small, well, not small, but moderately sized spodumene bearing dikes. Nothing very shocking, let's put it that way. And it turned out to be the fingers of a hand, right? So, they drilled, at surface looked like this, and then there was a massive palm at the bottom, which, is going to be hundreds of millions of tons, probably the largest asset in Quebec. So our view is quite simple. Whenever we make a discovery, you have to drill it. You always have to drill it. Doesn't matter how good or bad it looks from surface. Now, set aside the extremes, obviously, but you always have to drill it because you won't know until you drill it. Is it, disparate dikes? Do they, connect? Do they just pinch out? You do not know. There's a lot of variability when it comes to, and this is well documented across all the deposits. There's a lot of variability in terms of width and size. So you have to drill it. So even though we're quite confident that it's a sort of, I guess the only other way you could counteract that is by making sure that you have a large field, a large number of outcrops that they themselves are of decent size. That is obviously going to increase the confidence level that you have something of size. I mean, nothing is impossible, but it's highly improbable if I have, 10 spodumene bearing dikes that all measure 20 meters, that they're all going to pinch out to nothingness. It could happen, but then you'd be very, very unlucky. And so when I look at something like Nook, I mean, yes, we could be shockingly unlucky, but come on. You got to give us, you sort of make your own luck when it comes to exploration. And making your own luck is making sure you have a lot of targets to drill. So eventually you're going to find something of size. We have that with Mirage, and we should like that to have that as well in Greenland. But drilling is the only way that's going to confirm that. But all indication for now says that this is something quite significant, the type of asset that you want to be working on. So we're very excited to be there.
How are you thinking around capital allocation going into next year? You have Greenland, you have Mirage, you have Anatacau Main, and you could also be looking at other projects. It would be good if you could fill us in on that.
Yeah, so that's a very, very good question again. The advantage is we can sort of be reactive to a certain extent, right? So we have some plans, we have some ideas, we're having discussions with various groups out there in terms of how do we move on our portfolio. Do we want to bring in partners? How do we want to advance this? What is priorities? And so, we also want to look at the context of the market itself, right? If the lithium price continues to rise, it's pulled back a little bit now, but it still rose and nearly doubled over the span of 2 months. So if the lithium price is in a healthy position, then maybe we open up the faucet a little bit more, right? We start to do more programs across our portfolio. If the lithium price is still low, then we'll just be selective in terms of our deployment of capital. We can right size things. That's sort of the advantage that we have in Brunswick, is that we're not committed to just one thing. Obviously an asset like Mirage, the next round of drilling would probably need another 5,000 to 7,000 meters of drilling. But an asset like we do in Greenland doesn't require as much drilling because it's the first round of drilling. It only requires, call it 1,500 meters of drilling. That's smaller program. That's less capital, right? So we can pick and choose and build a fulsome exploration program over a year and select the most high impact programs. If I have more capital because our share price is doing good and the lithium price is doing good, perfect. I've got work that we can do. And if the price is lower, then fine. I still have work that we can do. And that's again something that's very unique. We're never complacent. We're never just crossing our fingers and hoping that $1 million appears out of the sky or our share price quadruples or the lithium price quadruples. We are always doing something. We are always very, very active across our portfolio.
Are you looking at other projects?
I wouldn't call it other projects. We're again, the same mentality that brought us into Greenland. Well, we never switched it off, right? We're always looking at the forefront into going to areas that have never seen lithium exploration and saying, well, hey, is this somewhere where we can be impactful again, that we can make, again, the first discovery in this country, in this new area, in this new jurisdiction, in this new province. So that's something that we are still very, very much at the forefront of. And we are very cognizant that there's an opportunity there. And it also happens to be very low impact work. More than anything else, prospecting is always going to be dirt cheap. It's a guy in a pickup or it's a guy in a helicopter. It doesn't cost me that much to do. Guy or girl, we're not going to be sexist here.
Sometimes in bear markets, companies acquire new projects with different metals. And
oh, no. Okay. You mean like that? No. Our strength. Okay. So you ask, are you going to do gold or are you going to do copper? Look, I take the view that there's a heck of a lot of smart geos on the gold side. All right. There's explorationists that are absolutely geniuses out there, and they are very good. In terms of explorationists on the lithium side, not to say that there's no one smart out there, but I find that there's not that same mindset. If you look at the last wave, a lot of it was more development work than true exploration, right? And so that's where we see a difference, and that's why we want to continue on the lithium side, is that we can have a much larger impact. There's no other companies doing this type of work that we're doing. Grassroots lithium exploration work, we're pretty much the only game in town, right? And so that is a strength that we want to continue. And to use your example, in a bear market, there's very few other companies that do this type of work, right? Next to none, because classically in a bear market, one should only be working on advanced asset. One should only be focusing on the largest and best and biggest. And fine. But it's actually the best time to do exploration work because you have no competition. And so that's where we find that, we have an opportunity inside Brunswick. Going to Greenland in a bear market like what we did was kind of unique. Eventually somebody would wise up to it in 2, 3, 4, 5, 6, 7 years about going to Greenland looking for lithium. But we said, well, right now, let's use what we're good at. We're good at making compilation work, generating targets, making discoveries. Let's go ahead and do it in Greenland. So no, absolutely. Our strength is in lithium exploration. Don't expect us to do other commodities. That is what we're good at. And that's what we're going to continue to be good at.
Great, that clarified. So could you summarize the catalyst for Brunswick in, say, the coming year?
Let's go it over again. Resource estimate at Mirage. Drill results from Anatacau. We're going to have more prospecting news from our program in Greenland. Then going on to next year, we are going to have we're going to aim to start drilling in Greenland. We're going to look to continue refurbishing and expanding our portfolio. We have obviously significant more work that we could do at Mirage. We are going to be very, very active for the next 12 months. It's best time to be a Brunswick shareholder is right now, especially when you look at the lithium market, right? The lithium market is looking a lot healthier than it was at the start of the year. And so that tells me that now is a fantastic time to be an existing or new shareholder of the company.
So with that in mind, where do you envision Brunswick exploration at the end of next year?
Oof, that's I would like to say with 2 or 3 major assets that have Mirage potential. Let's put it that way. So, I would say an asset that is already at a research stage, that can be Mirage, but then 2 or 3 more that have the same potential to grow to that level. And then, from our perspective, that means that Brunswick is one of the most unique stories out there with a number of impactful assets in various impactful jurisdictions, right? Greenland is at the forefront in terms of mineral development, in my mind, at least for Europe, irrespective of what Trump says. And Quebec obviously has a capacity to supply all of North America. As we all know, there's a significant endowment there. There's a number of assets that are moving along, and we're obviously part of that mix. So, it's going to be just more on more with a better lithium price. You can't ask for a better situation.